Hello and welcome to an FXTimes daily market recap. I'm CMS Forex market analyst Nick Nassad. Today is Friday, January 22nd, 2010. Taking a look at the euro-dollar pair, we see that the steep decline in the pair has stalled, mainly in yesterday's trading as we hit the 1.4030 level, and today the euro rose a little bit higher, moving above its 50-period moving average. The pair used that moving average as a level of support in today's trading, and we hit resistance around 1.4170. Overnight, the euro reported industrial new orders data for the month of November, which showed that orders were up 1.6% for the month, a figure that was much better than expected. On the year, orders are down only 1.5%, which compared to a negative 14.4 reading in October. Looking at the chart to the right, we see that following a very steep drop in orders during the financial crisis late in 2008, we have been rebounding. We did see a decline last month, but now we have rebounded again, and we are continuing this upward trend. The pound-dollar pair, after rising overnight to the 1.6280 level, following the decline yesterday, we had a second leg of a downswing following weaker than expected UK retail sales data. We broke below our support from yesterday's session around 1.6125, and we hit a low at 1.6075. The last three sessions have been a pretty dramatic turnaround from what we saw in last week's trading when the pound was rising on better data and some expectations that the Bank of England may begin to signal that it was ready to tighten monetary policy. Yesterday's trading, we saw that those expectations took a bit of a blow as we saw the money supply had contracted in December, and we had very poor budget figures from the UK, reminding people and traders of the dangers facing the UK fiscal situation. Today, with the retail sales coming in underwhelmingly under forecasts, we had another sharp swing downward. If we look at the recent rally we had in this pair and plot Fibonacci retracement levels, we see that today's support came around the 61.8% area. In a look at the euro pound, we see that we've had about 8 sessions in a row where the pound was gaining on the euro, but yesterday we finally found some support, and today, after retesting our 50-period moving average, the pair rose again in favor of the euro in the wake of the weak UK retail sales data. We'll see if this newfound theme here of the pound weakness extends when we begin trading next week, or if we're just correcting this downswing that we had the last 2 weeks. In that release from the UK, retail sales for the month of December were up 0.3%, but forecasts had called for a 1.3% gain. So that just made up the 0.3% decline we saw in November. On the year, sales are 2.1% higher, which was a lower pace than in November and much lower than the forecasted 3%. The dollar-yen pair, following its very sharp slide in yesterday's trading, broke below its support from yesterday around 90.20 and hit a new 1-month low around the 89.80 area. Right now, traders are a bit uncertain, and risk aversion has risen as we've had several negative developments this week, including the Obama administration's proposed banking regulations, the delay in the Senate's vote to reconfirm Ben Bernanke as Fed chairman. We also had revived concerns over Greece's sovereign debt, and speculation that China will take further steps to tighten monetary policy. So that is triggering movement towards safe haven, and at this point the yen is the preferred currency for that purpose. In another retail sales report, this time from Canada, for the month of November, sales dropped 0.3% for the month, which was weaker than forecasts. Expectations had sales climbing 0.2%. That compares to a 1% rise in October. Core sales were expected to rise 0.5%, but were flat on the month. So a very disappointing report from Canada. The US dollar Canadian dollar, which broke above the 1.04 level in this week's trading, kept rising in favor of the greenback. Let's zoom this out to show you that 104 area. and following a sort of consolidation pattern in its rise in yesterday's session, we retested our moving average, and following that test of the 1.0460 level, we had a sharp rally following the weak retail sales report. So we hit a high, intraday high at 1.06 and turned back after that. Zooming this pair out a little bit further, we see that our next level of clear resistance is the 10750 level, as well as here the 1.0650 area. So we'll see if we're going to test that area, if this right now, if the mood and risk sentiment remains risk averse, and if commodity prices keep falling the way they have, which has been affecting the Canadian dollar. So that will do it for this week's highlights and fundamental analysis. Let's take a look at what we can expect next week with our key releases. From the US, Monday we're going to get data on existing home sales. Tuesday we have a trio of releases, the Standard & Poor Case-Shiller House Price Index, the Conference Board Consumer Confidence Index, as well as the Richmond Fed Manufacturing Index. Wednesday we get new home sales data, as well as the Fed FOMC interest rate decision. Thursday we get durable goods orders, while Friday we get fourth quarter GDP figures, our first look at growth in the fourth quarter in the U.S., as well as the Chicago PMI and the final version of the UMich Consumer Confidence. Around the world, Monday, Japan has its Bank of Japan interest rate decision. Tuesday, the UK posts its nationwide house price index. Germany releases data on business climate. The UK posts its fourth quarter GDP, and Australia releases fourth quarter consumer price figures. Wednesday, the main release will be the New Zealand central bank's interest rate decision. Thursday, we get Germany's unemployment change, and Friday, we get a look at fourth quarter GDP figures from Canada. And that will wrap up our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site, FXTimes.com. I want to thank you for watching and wish you a great weekend.